Good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments. On a jolly good day, glass is half full, money is being printed, everything will go right, nothing can possibly go wrong. Retail investors are chasing phantom stocks, and on social media, we're not allowed to say our opinion anymore because we'll get banned and censored. That's the summary of the world we live in, I suppose. As a heads up, Powell is going to start speaking pretty soon, and I will. That's why I'm starting early. I'll try to keep it tight. There's going to be introductory statements, and when he starts speaking, I'll wrap this up at the latest. Briefly, S&P futures are up 70. That's down from the high. And bonds are the 10 years down 12 ticks. The 30 years down 2 full points and 3 ticks. Gold is now up. Is now down 80 cents. 0.04%. The euro is at 112.68. That is down 0.5%. Strongest currency is the Norwegian krone, up 47 basis points, and the weakest one is the Swedish krone, down 48 basis points as I speak. Stock markets around the world have been soaring. The Euro Stoxx 50 is currently up 3.86%. That was up over 4% earlier today. Nikkei was up 4.9%, Hang Seng 2.4%, the CSI 300 in China 1.5%, Australia was up 3.9%. Oil prices are up almost 5%, 4.75%, up 176 at 38.88. For West Texas, Brent is at 41.31. That's up 160, also 4%. Retail sales numbers, strongest on record. Higher percentage gain than percentage drop last month, but if you know percentages, that doesn't mean you're back to where you are before. But people used their stimulus money and went out and spent again. So $1 trillion gets you a nice retail report, it seems. That's people were locked up and went out and spent again. It's all good news, of course. The question is, how sustainable is it? And the FT talked about a K-shaped recovery. I guess those who can do spend. The weaker segments of the economy, they don't matter apparently for the headline numbers. And so where's this all going to go, right? I mean, on top of that, we have a Fed giving an amazing stimulus. And as the Fed gives this amazing stimulus, the question is, can that possibly do anything but drive asset prices higher? And of course, that is not a prediction, forecast, or investment advice. So let me put this in here. Yesterday, the Fed announced that rather than merely buying corporate bond ETFs, they will buy individual corporate bonds. So some context here. Historically, the Fed does not buy corporate bonds because you don't want to allocate credit to a specific sector of the economy. As a purist, I would argue that even buying mortgage-backed securities is not monetary policy. So as you might imagine, I'm not a particular fan of the corporate bond buying, but some make a big deal of them moving from ETFs to specific corporates. Now, my best guess is that they had announced they'll buy ETFs, and then the sell side, the brokers, went to the Fed and said, "Listen, hey, you don't need to buy the ETF; you can go direct." And then the Fed probably said, "Well, we don't want to be appearing as favoring any particular corporate bond." It says, "Well, you can buy the index just as much as anybody else." What do you think the market makers are doing when they make a market in these ETFs? They also don't have an opinion. I mean, maybe the conversation didn't go that way, but somebody convinced them that there's no need to give the money to the ETF sponsor. You can do this direct. You can have an index-based approach, and we'll help you do it. And that way, the broker gets a tad of a commission rather than a hefty commission for the ETF sponsor. So something along those lines, I suppose. The fact, though, is that the Fed is now owning corporate bonds, has expanded to it, and the question really is, what sort of support is needed if we do open up the economy again? And the path has been chosen is we'll print whatever we can, and there is not going to be a problem because unemployment is high, and we only ever going to have a problem if unemployment is super low, and therefore we'll just print as if there was no tomorrow, and risk assets seem to be reflecting that. And so, do you want to fight that? Well, on a day when the stock market is up, no. And a few days ago, when the market was down several percentage points, you say, oh, well, maybe this doesn't work so well anyway. Anyways, a few other things happening around the world. The European Union started a a antitrust suit. Um, and again, no investment advice on Apple or alike, but historically there have been some very hefty fines that have been imposed um, on companies that were affected. So sorry about that. I was just starting here a video feed to see when Powell starts chatting. Otherwise, we had South Korea, North Korea, some tensions and whatnot. Most of the other things aren't quite as relevant. We will hear from Powell what he has to say, and my best guess is that he's just going to double down and say, "Hey, we need all the support we can get." He said there's lots of uncertainties about the future. When he gave the uncertainties about the future speech last week, the market didn't take it too well, but I guess now they realize that it means that they'll print a lot of money. Anyway. Um, the only thing is that this has attracted lots of retail investors back into the market, which is not in itself bad. But the shutdown, nobody had anything else to do. So now we have an online casino, it seems. And so we'll see how this goes. Be safe out there and try not to play casino too much. Try to think about your investment process. With that, have a good day and talk to you soon.